I'd also like to welcome Mr. Rajuri, former member life of IRDAI and mentor of Insurance Advisors National Institute of BFSA onto the dice. Thank you so much, sir, for being here today. There is an announcement. Mr. Joy sir will be joining us shortly. We are now request our chairman, sir, Mr. Abdul Hussain, to deliver his opening remarks. Over to you, sir. Thank you.
Mr. Gopalakrishnan, full-time member SEBI, Mr. Venkateshwar, CEO ICC, Mr. Sasi Krishnan, Director Financial, Mr. Rao, EVP Aditya Birla, Mr. Abhishek Kabra, MD of Samra Capital, Mr. Abdullah, and Mr. Sudhir Rajpuri, former member of IIT. Ladies and gentlemen, good morning. The financial service sector will always play an instrumental role for shaping the economic landscape, and we are all aware. As it tries to achieve the overall goal of efficient Bharat by the year 2047, India is targeting to achieve universal financial inclusion by year 2047, and not only universal financial inclusion, but also financial well-being, ensuring access to financial services for all population segments through digital enablement. Further, the objective of Viksit Bharat is to empower India and help create a society that is prosperous, I repeat, prosperous, inclusive, definitely, and sustainable, wherein all of its citizens have the opportunity to thrive and meaningfully contribute to the nation's progress. In the recent decades, India's financial ecosystem is characterized by a new era of accessibility, innovation, and customization. The widespread penetration, you all know, of UPI, Aadhaar-enabled payment system, that the AEPS, and a full range of digital solutions have established a robust interoperative financial network. Financial products are now designed to be more adaptive and intuitive, effectively making it easier for customers to interact with financial service providers. In India today, the capital market, the money market, and the industry, that is the financial services industry, experience robust growth due to progressive reforms and economic policies. One of the very successful stories in the financial services sector in recent years has been the impressive growth of the mutual fund industry, which is growing leaps and bounds. Starting today at 67 lakh crores. India's mutual fund industry has emerged as a powerhouse, attracting a surge of investors seeking avenues for wealth creation and financial growth. The mutual fund landscape has undergone a remarkable transformation in the recent years, as was mentioned, characterized by significant redistribution of assets, which is very important, and a growing emphasis on smaller cities and towns. I stress on two aspects again: redistribution of assets and emphasis on smaller cities and towns. I have been a senior banker with SBI, primarily, we used to focus on deposits. MD of insurance company SBI Life, where promoting, and protection and savings, as well as chairman of national pension system, looking at basically, your social security and savings. But mutual fund, with its quantum leap, is the front-running accelerator for transition from financial inclusion to financial well-being for a Viksit Bharat 2047. Rapid adoption of digital technologies and the availability of faster data speeds has driven this shift. An evident manifestation of this trend is the substantial increase in retail contributions to systematic investment plans, which we all know, highlighting the pervasive digital presence across the nation. Over the past decade, the mutual fund industry has achieved and experienced remarkable growth, as I was mentioning. As of today, it stands at 67 lakh crores. It is a substantial the mutual fund industry has led to noticeable improvements in recent years in the relative size of assets under management in terms of real economic ratios such as GDP, gross savings, and total deposits with banks. The implication of this metric is widespread and is not limited to stakeholders, which includes households, corporates, and other financial institutions like commercial banks, but also for the financial system and even the economy as a whole. Long, running or for growth in industry, significant under-penetration, increasing retail participation, asset under management to GDP at 80%, whereas the global average is nearly 65%, but there is a long runway and a long way to go. The growing interest in mutual funds is changing investment landscape and wealth creation in India. But however, only 47 million unique investors are there in mutual funds, vis-a-vis 750 million bank holders, which is only 3.2% of the population as far as mutual fund is concerned. Today, among households, there is now a cultural shift away from traditional savings methods like bank deposits and physical gold. Therefore, mutual funds have become an alternative conduit for converting household savings into financial investment, thereby fueling the real economy and acting as an essential link in the financial market chain. Although the mutual fund industry has experienced impressive growth in recent years, as I was mentioning, it has an enormous scope for further expansion, as its penetration is still relatively low, as I was also mentioning, with the AUM to GDP ratio in India much lower compared to the global averages. Favorable demographics, the healthy savings rate, rising financial literacy, growing use of fintech platforms, today we'll be discussing that, affordable internet availability, rollout of UPIs, artificial intelligence, increasing digitalization are some of the factors which augur well for the mutual funds as an investment option in India. Today's summit will feature insightful panel discussions, keynote speakers, and networking opportunities. Definitely, we will hear today from industry leaders who have successfully capitalized on India's growth story, and from regulators who will shed light on the regulatory and policy landscape that is shaping the future of business in India. I hope very much so that today's deliberations will provide a vision on how the industry can position itself for the next growth phase, for the next 23 years, that is in 2047, and deal with these challenges. Thank you.
Thank you, sir, for your opening remarks. We are now request Mr. Abdul Chairman of ICC National Expert Committee on BFSI to deliver formal welcome address, please. Thank you.
Good morning. It's my pleasure and honor to welcome you all in this program today. On behalf of Indian Chamber of Commerce, I would like to thank you all for making the minute for today's program. It gives me immense pleasure to welcome our chief guest, Shri Anant Narayan Krishna, old-time member SEBI. I extend my warm welcome to our guest of honor, Mr. Venkat Saraswati, Chief Executive MC to today's event. I extend my warm welcome to our special guest, Mr. Shashi Krishnan, former CEO and BF Trust, NSM, to today's program. I would also like to extend my warm welcome Mr. K.S. Rao, EVP, Head of Industrial Relations and Decision Development at Aditya AMC. I welcome Mr. Abhishek Kamra, Managing Director of Samara Capital, to today's summit. I also welcome Mr. Asanu Singh, Chairman, ICC Mutual Committee, BFSI, former MD and CEO, SBI Life Insurance Company, to today's summit. I also welcome former MD, Mr. Sudhir Raitoji, member IITA, member mentor, insurance for ICC National Expert Committee BFSI to today's program. DSS, it's our privilege and honor to have you all in today's program. Distinguished guests, ladies and gentlemen, to set today's tone for this discussion, I want to make a few brief points about mutual funds industry in India. In the last 2 decades, the Indian mutual industry has witnessed a paradigm shift. Why I use the word shift? Because today's mutual fund has, like SIP, has become a favorite investment avenue for all people. It has emerged an important avenue for asset wealth management, channeling the savings of millions of individuals into equity and debt instruments. In October 2024, the mutual fund industry has witnessed a significant change in its AUM. The average net AUM for the month of October 24 was 62.26 lakh crore, and the monthly SIP crossed rupees 28,000 crore rupees in this month. If we compare a year ago, it has witnessed a number of about 55%, thanks to the effort of SEBI on it. This trend in substantial increase in retail contributions to SIP highlights the pervasive digital presence across the nation in a constantly changing financial landscape. Technology is undoubtedly a powerful force transforming the way investments are made. In the case of mutual investment, technology is substituting traditional methods. The industry is changing technology and using it to enhance customer experience and simplify investment processes by techniques like AI and machine learning. The internet, mobile phones have made it easier than ever before for investors to access and trade mutual funds on online method also. Why? Actually, when mutual funds currently dominate the industry, there is a growing trend toward passive investing also. In India, passive funds AUM has increased significantly, reflecting investors' preference for low-cost investment options. As the market matures, we can expect a further shift towards passive investing. Also, to reduce the compliance burden of AMC and foster innovation, SEBI is engaged with the mutual industry to introduce MF-like regulations for passive funds. Towards building up investor confidence and market accuracy has played no role by regulating the industry by creating an environment of growth and transparency in the mutual industry. Recently, SEBI has enforced stringent measures against front running and insider trading. Build confidence among investors that the investments are being managed ethically and in compliance with regulatory standards. As investors seek to diversify their portfolio and benefit from alternative asset classes, it can be expected that the industry will expand its offerings in this space and provide retail investment options to investors. This is leading to emergence of funds that will invest in alternative asset classes such as real estate, commodity and infrastructure. Although the AUM has reached 50 lakh crore market, but with just over 40 million investors in a country with a population of 1.4 billion, it is moving from big metro cities to smaller cities and in place of other savings options. However, an increasing appetite for wealth creation through equities rather than traditional instruments have been replaced in less dominant areas. SIPs are gathering significant attention in smaller cities. As of August 2024, 54% of all SIP accounts in the mutual fund industry were from smaller cities. Therefore, it is imperative that ongoing efforts to educate and engage investors in smaller cities is crucial for its driving future growth in mutual investments. This will ensure that all B30 cities play a larger role in industry success. In recent years, mutual industry has seen entrance of few players in sector, including various startups, international asset managers. New players are bringing fresh perspective and innovative approaches to the industry, thereby driving competition and promoting growth. This has made the sector highly competitive with several established players vying for market share. However, the focus should be now on to expand the pie and further attract research education and government making mutual investments more tax efficient may be a way forward. Therefore, the increasing penetration, developing technology, expansion of asset classes, changes the mutual industry is poised for growth and providing investors with the investment options and opportunities to meet their financial goals. Indian Chamber of Commerce encouraged by the security response, received across past mutual summits today is organizing 16 mutual summit to exchange the idea of how emergence of disruptive forces can continue to shape the future of the management industry, creating necessary linkage between industry and policy makers. With these few words, I once again welcome all our guests and speakers and look forward to fruitful deliberation in the elections. Thank you.
Thank you, sir, for your welcome address. May I now request our chief guest, Shri Anand Narayan Gopalakrishnan, full-time member from Securities and Exchange Board of India, to deliver his keynote address. Over to you, sir. Thank you.
So, Abdul Hussain, so Venkat Nageshwar, Mr. Sachin Krishnan, Mr. Chaudhary, Mr. Gavra, Mr. Rao, and Mr. Lattar, and the ICC community. First of all, I wanted to thank you for inviting me to this beautiful city of Kolkata. I have a confession to make. I was born and brought up in this city, so I always look for excuses to come back to the city. আমি তামিল কিন্তু I'm sure আমার বাংলা তামিল চেয়ে ভালো বলতাম I don't think the ovation. So in fact I managed to bring my wife also along and I want to show her my old school, my old Pada, where I used to play cricket, badminton, all of that. So thank you once again for inviting me here. When I was a young banker and I just joined the bank, I was the only person in my batch who asked for a transfer to Kolkata, saying I want to stay here. And you know how it is in banks and in any professional organization. What you ask for, you'll never get. If somebody else was sent there, I was not sent. But first of all, I wanted to say that I'm here on behalf of my fellow full-time member, Amarjeet. He is the person who looks after mutual funds in SEBI. Of course, all of us full-time members get together and discuss policy matters, etc. But between him and Executive Director Manoj Kumar, they are the people who really look after the mutual fund industry. I'm there on their behalf. Speaking somewhat as an outsider, therefore, not directly overseeing mutual funds, I have to compliment the entire mutual fund ecosystem, all of you, for what has been clearly a tremendous job that we have done over the years. A lot of statistics was mentioned by Mr. Sen, by Mr. Lattar. It's just incredible. You know, March 2019, there were about 2 crore unique mutual fund investors. Today, that number has crossed 5.1 crore unique investors. There are plenty of statistics one can give here. You know, over the last 5 years or so, every year, mutual funds garner about 2.5 lakh crore of fresh money from investors like you and me. Two, oriented towards risk-seeking schemes, including equity schemes, ETFs, index funds, hybrid schemes, so on and so forth. Not to debt, but to risk-seeking schemes. In this year, in this fiscal year, from April to October itself, the number is almost 4 lakh crores. It's 3.86 lakh crores. That's a fresh amount of money that's really come into the ecosystem. That's the reason why from about 23 lakh crores of AUM in March 2019, 5.5 years ago, we are now at 67 plus lakh crores of AUM. It's been a tremendous journey. I could go on, the number of pin codes covered, the number of districts covered with investors, it's just amazing. As we reflect now, though, it's very important that we preserve this ecosystem. There's a beautiful proverb in Bangla, which says, effectively, do not harm the tree that bears the fruit. It's a variation of do not kill the goose that's laying the golden eggs. In fact, Rahim had that beautiful dua. दुख में सुमिरन सब करे सुख में करे न कोई जो सुख में सुमिरन करे तो दुख काहे को होए. This is such a beautiful time for the mutual fund industry. This is the time we have to think about how to preserve the ecosystem. Now, this is a very unique challenge for all of us together as an ecosystem. In every mutual fund ad that AMFI comes out with, you will see two parts. One is mutual fund sahi hai. The second is mutual fund investments are subject to market risks. And that is the unique nature of financial inclusion in capital markets as opposed to banking. In banking, it's just come, open accounts. Here we are saying, please open accounts, but with your eyes open. Do not come in expecting to become billionaires overnight. Do not come in thinking this is a beautiful journey which is risk-free. Do not come in saying there is any assurance of any kind. Please be risk-aware. If we have to preserve this tree which is laying fruits, we have to ensure that risk awareness is there at all times. By the way, this tree that's bearing fruits, some of the results are amazing. It feels like it's been a very volatile time over the last few days. We are still close to 18 to 20% year-on-year growth on the Nifty in the major indices. Over the last 5 years, we are still feeling close to 15% annual compound annual growth rate return on the indices. And yet, the last few days of volatility, and you see some murmurs already, oh my God, what is happening? The problem also is, if you look at the last fiscal year FY24, the major indices, Nifty, Sensex, etc., gave you returns of about 28%. That's an amazing return. And the volatility was just 10%. That's a beautiful outcome. It's also a scary outcome because that breeds complacency. That breeds the feeling that there is no risk in the ecosystem. In a way, volatility is not a bad thing. So what can we do as an ecosystem to build risk awareness? By the way, AMFI has some mutual funds and AMFI has a substantial amount of funds available for investor education. 1 basis point of the entire AUM goes to AMFI for investor education. We have to use that corpus very, very carefully for investor education and for building risk awareness. And here is where I would request the ecosystem to get involved in a lot of analysis, a lot of thinking. Today's day is of social media. We only have time for YouTube shorts and for Insta posts and for very quick breaking news. All of us come out with very news. Just make the statement, forget about everything else, no analysis. As an ecosystem, we can't afford that. We need analysis. We need thoughtful, analysis. And here is the beauty of our ecosystem, which I want us to appreciate. Do you know that our exchanges have data at an individual investor level on who is doing what? In the US, in large major markets, the exchanges only know which broker is doing what, not which end investor is doing what. Here, we know at a pan level which investor is doing what at the exchange level. When we came out with the analysis, which said that 93% of all individual investors who have traded in futures and options over the last 3 years have lost money. It was based on 100% analysis. It was not a sample. We could see every single individual investor and see what is happening. This is impossible in any other jurisdiction. Similarly, our depositories have data at an individual investor holding. Any other depository in the world has holdings of custodians, custodians hold for brokers, brokers hold for investors. Nobody has a cumulative oversight of what is happening totally unless a regulator asks for all the data to be put together, which is a painful process. Here we have that data. Now, my request to AMC, my request to the mutual fund industry and to advisors, etc., would be please use this data. There's a lot of analysis, as we did analysis on futures and options. We did analysis on intraday trading. 70% of all individuals who buy and sell intraday lose money. We did analysis on IPOs. Most retail who are supposed to be long-term investors who come into IPOs are actually short-term investors. They are flippers who get out within a week of the listing. There is a wealth of information that's available, and it is too important to be left to SEBI, which is not a market entity, to do the analysis. You have the data. And this is another thing I want to emphasize. This data belongs to all of us. It does not belong to SEBI. It does not belong to the exchanges or the clearing corporations or the depositories. It is public data. Of course, we can't reveal which PAN number is doing what. There is confidentiality, there is privacy that we should take care of. We can't even give you data which will allow you to guess who is doing what. That we have to be careful about. But otherwise, all data is available. In fact, SEBI came out with a consultation paper which requested that you please look at what data is available. We are actually saying the market infrastructure institutions will make up to 2 GB of data available to over us free of cost, as long as it's public data. We want you to do that analysis. What kind of analysis can you do as a mutual fund ecosystem? One, I think we have to explain risk better to our investors. We do a good job of explaining return. Here it was, they were last 1 year, 18% return, 20% return, last 5 years, return. What we don't explain is what is the risk element. Often we say our risk that's bad advice. Return and risk are 2 separate independent parameters that have to be understood by business. Now, unfortunately, unlike return, which is a simple number, explaining risk is not easy. And the mathematical definition of volatility, which I can give you, will be useless for most normal people. It's the standard deviation of the log normal daily returns of a particular price. Effectively, it tries to measure how much of pain you go through, you feel when you see a market going up and down every day, not just down, it's also up and down, right? That fluctuation. Our risk meter is good, but I think the time has come to take it to the next stage, where we use a combination of things like volatility. Our risk meter clubs everything as high risk. Equity, credit, AIS, EMS, everything is high risk. We need to differentiate. There's a big difference between a mid-cap fund, a small-cap fund, a large-cap fund, and debt and credit indices and so on and so forth. I think that requires a lot of analysis, thought, and how do you simplify it and explain it in a simple manner. The second risk which I want the ecosystem to think about is the stress tests. Now, one set of stress tests have already been done by the mutual fund industry last year. Think of it this way. Because so much of money has come from individuals and mutual funds into the markets, markets have gone up. As I mentioned, if you have 4 lakh crores of fresh money coming into the ecosystem just this year, last year, by the way, across FPI's mutual funds, that number was 3.6 lakh crores against fresh supply only 1.8 lakh crores or 1.95 lakh crores. So a lot of the price rise is also self-fulfilling. When you have money coming in, prices go up. What happens, God forbid, if people start to withdraw the money? Stress testing is thinking about these things, not being shy of it. It's not hiding it. And making it public. Do not start with the assumption that there are certain things we can't discuss, that people can't handle the truth. Don't do that. People are smart. Let them understand. So if you have 10% of withdrawal from mid-cap schemes or small-cap schemes, what will happen? And this is across all schemes. What mutual funds do right now is for individual schemes. Stress tests are not expectations these things will happen, but it is testing what will happen if this happens. By the way, the numbers that we have come out with, the analysis we have done, suggests that the number of days it will take for mutual funds to sell down stocks, in case there is 10-15% of withdrawal across all mutual funds in let's say mid-cap schemes or small-cap schemes, have not risen too much over the last 2-3 years. What it was in March 2022, it's still roughly the same in March 2024, which is good news. Which means despite the increase of holdings of mutual funds, we still are largely manageable. But what we have to also understand is that the average daily trading volumes have gone up tremendously in the last 2 years. That's why the number of days is not showing high. And why have volumes gone up? Because mutual funds are buying. If mutual funds start to sell, if mutual funds themselves start to sell, who will buy and will the volumes really sustain? That is the kind of stress analysis we have to do. And if you use last year's volumes of this year's holdings, the numbers are very different. And it's not taking steps on the back of this kind of analysis as to what should you do to both educate the ecosystem as well as risk manage yourself. This is not being negative. This is actually preserving the tree that's laying the fruits. Take the steps now. You're not killing the ecosystem, you're actually making it stronger. So, analysis around volatility, analysis around stress tests so that people are aware of what the risks are, extremely important. And this community, the mutual fund community, is the smartest community I know in the market. It attracts the best of talent, people know what's happening on the ground. My request to you, if you see something wrong happening in the ecosystem, some manipulation, some fraud, some mis-selling, we grow up thinking it's a bad thing to complain about others. This is not snitching, this is not complaining about others, this is preserving the tree that's laying the fruits. Because bad actors can absolutely destroy this tree. So if you see something bad, tell us about it. Even if you're not involved in it directly, tell us about it. So my request to the community is, please try and explain risk better to your investors. It's extremely important that that happens. Volatility has to be imbued. Second, please try and understand the risks in the ecosystem better mathematically and then explain it to people in a simple manner. And do risk management yourself in a prudential manner. And if you see something wrong happening, please treat it as something which is threatening the goose that's laying the golden eggs and therefore needs to be addressed. You're not snitching against anybody, you're actually trying to do something in the ecosystem. I'm going to leave a couple of other thoughts with you. By the way, I taught for 5 years, which is why I speak so much. I'm used to seeing a class of people speaking. As Mr. Sen also mentioned, We are trying to take some initiatives for mutual funds because this is a system we trust. So you talk about the mutual fund light ecosystem where we are trying to have a easier registration process for AMCs that are only doing index funds or passive funds. We talked about the new asset class where we want higher risk funds. These are positive initiatives that we are trying to grow the mutual fund ecosystem. If you have suggestions around this, do tell us what can be done. My suggestion along these lines would be, do look at what you could do to make the process more efficient for your end investors. Why does it take so much time in today's day of instant transfers where you have NEFT, UPI, RTGS, all of that available? Why does it take more than 1 day or sometimes 7 days for people to realize their funds? When you are exiting, you should be able to get the fund immediately. Similarly, we are trying to introduce T+0 in the ecosystem. I would expect mutual funds to take advantage of this so that people actually get quicker access to their funds or their securities, and it builds the efficiencies in the ecosystem. Short point, being experts, please do not limit yourself to the mutual fund ecosystem. Feel free to be part of the policy deliberations on everything to do with capital markets, including on things like T+0, on as well as secondary, on futures and options derivatives, because you are actually a crucial part of the ecosystem, and this ecosystem impacts you as well. The reason I also mentioned this analytics thing is so important. Some of the things that we find in the data is that they are not consistent at times. So for instance, if you were to look at a number being published by the exchanges and compare it to the same number being published by the depositories, you will sometimes find there are large differences. One example I'll give is of FPI flows. Just check the FPI net numbers as reported by exchanges, as reported by depositories. There's a big difference. Now, we need that deliberation to happen so that there is a self-correcting check and balance. We've asked the exchanges and depositories to explain the difference anyway. But we would much rather that this ecosystem itself gets involved and detects these things and comes up with the correct numbers. And finally, the point about data I was making, everywhere in the world, people have to estimate what household savings are. When you're doing the GDP calculation, yesterday we had the GDP trend, you have to estimate what the savings numbers are. In India, because of our unique architecture where we know exactly what every person is holding, we can actually get a perfect number, an accurate number as to what household savings in the capital markets are from a ground up level. In fact, we're in discussion with RBI and with the Central Statistics Organization to see how these numbers can be used better. My point is, I would love this ecosystem to become a lot more analytical, to pour through the data, the amazing amount of data that we have, come out with good analysis, good outputs, simplify it so that the investor can understand what this means, both for risk management as well as for financial inclusion. I've spoken a lot, but once again, thank you so much for calling me Kolkata. My favorite city in the country. And I wish you all a good day of deliberations. We will look very closely at the outcomes that come of these deliberations. You've made a fantastic progress so far. Congratulations to the entire ecosystem. But there's a long way to go, miles to go. And it's extremely important that we do this in a careful, thought-out manner so that this garage which is giving us all is not harmed in any particular manner. Thank you so much and all the very best.
Thank you, George Chafias, for such an empowering keynote address. May I now request our guest of honor, Mr. Venkat Nageshwar Chalasani, Chief Executive from Association of Mutual Funds in India, to deliver his special address. Thank you, sir.
Shri Anand Narayan, whole-time member of CE. Shri Anand Singh, my senior colleague in State Bank of India. Mr. Nada, Sri Krishnan, Sri Mr. Rob, other colleagues on the dais and off the dais, colleagues from the industry, ladies and gentlemen, very good morning to all of you. First of all, thank you very much for making me a part of this particular summit. Like Mr. Anand mentioned, even I am very nostalgic to this particular place because this is a place where I started my dealing. I entered into the market community from my place called Foreign Department and United States Bank of India. So I'm very nostalgic of this particular place. And from here I learned the basics of markets. And that's the reason why I feel very, very happy coming back to it. And the second important reason is making me speak after Mr. Anand Narayan because he had given me so many works to do back when I go back to Mumbai. I know you have given me so many tasks and very valid those, but I'm definitely going to do it. Whatever you said, sir, we are going to implement that. Thank you for making me speak after you. So let me start beginning from what we're talking about, Viksit Bharat, what the India right now means. As we speak now, the country remains to be a bright spot. The Indian economy has outperformed the most optimistic forecast that have been made and has grown 8.2% in the last year. This is despite the fact that we had a global headwinds, looking at geopolitical tensions, be it high interest rates, high inflation, etc., etc. All these things are, the economy was doing extremely well. We are looking poised to grow at a faster pace. In fact, all numbers that were speaking earlier, be it IMF report, be it World Bank report, be it all the analysis by all the rating agencies were talking about a growth of approximately 7%. But yesterday's data was a bit of a dampener. We were not expecting the GDP numbers to come so low. But we were done a bit of analysis and was talking to some of our own economists. In fact, I was talking to Soumya Kanpur yesterday at the airport, and who's the chief economist of State Bank of India. You're looking at suddenly these numbers, is that cyclical or is it structural? So basically, what I understood from the interaction with her, that is only cyclical and we're going to bounce back. However, the GDP growth in this particular financial year is going to be around 6.5%, with whatever profit in this first half year, taking into consideration whatever we are going to grow in the next half year, will be growing at 6.5%. So we are on the path of growth, we are on the path of the achieving our Prime Minister's vision of becoming a Viksit Bharat by 2047. It's not a dream of the Prime Minister, though, it's a responsibility of all of us to be a part of this particular journey to become a Viksit Bharat. And for this, I remember being a banker again, like Adani Singh sir was talking about. Being a banker, we used to see how we have done this financial inclusion piece in 2014. The jam which has come there at that point of time, Jandhan, Aadhaar, and mobile was a great success, and it would bring around 45 crores of people into the financial world. But that financial inclusion is not enough by itself. If you want to become a Viksit Bharat, the financial reach or financial prosperity of the country has to be spread across all the people in the country. And for that, we're looking at what is the solution for that. The solution for that is going to be the financial literacy. It is extremely important. As we speak, most are saying that India has got around 75% literacy. But when 75% literacy is what we're talking about, but when we look at NCFP survey, it shows that financial literacy is only 27%. So we need to move towards making all people literate so that the fruits what Mr. Narayan was talking about is spread to all the people across the country. the what AMFI is doing, and I'd like to move towards what AMFI is doing in order to spread this particular, what efforts AMFI is doing in order to ensure that we move from this financial inclusion towards financial well-being. What we have done, I think all of you are aware, like what Mr. Narayan spoke about, is one basis point which comes to mutual fund and AMFI for the purpose of spreading the investor awareness. The mutual fund Sahiye campaign has become a synonymous with simplifying mutual fund concepts to the masses. From an alien concept, it used to be, but if you look at in 2013, 14, or even 15 up to 16, it used to be perceived to be only for the wealthy. Now the mutual fund are for everyone. It has become a household product. At least we are seeing that people earlier, it used the investments were to be made in the mutual fund industry by on an average of 25 plus. Today we're looking at the people who are investing at around 27 plus is the average age of investments in the mutual fund industry. And the entire mutual fund industry has been putting in increased efforts to take this financial literacy to the masses. From being present on the biggest media properties like IPL, you will see our advertisements in IPL, you will have seen our advertisements in Convali and Property. Not only that, what we have done certain changes during the particular this year. We have started Bharat Nivesh Yatra, Nivesh Run, which was 5-kilometer run which we conducted in 4 centers last year. And this year also we have done it in 4 centers to ensure that the financial well-being and health are to go together. So, and this is done not in Tier 1 cities, but in Tier 2 and Tier 3 cities. In addition to that, we have already started what we call as Bharat Nivesh Yatra, where we have branded the buses. The buses are going across the country, covering around 170 Tier 2 and Tier 3 cities. And Bharat Nivesh essay writing competition has been started. We have started this particular competition in schools and colleges, particularly schools only, so that people at that young age do know what is about these investments. And this is, although they are not trying to get a world record, but it's going to be a world record because the number of students who are going to run this particular essay competition is going to be humongous, and we are doing it across the country. Last year alone, AMFI and AMCs together conducted over 13,000 investor awareness programs reaching over 16.5 lakh people. So the impact, I know the numbers have already been written down, both by Mr. Akanse and by Mr. Narayan also. We have seen a phenomenal growth of the industry. We have seen the way in which the industry has grown from 17 lakh crores in 2017 to 67 lakh crores as we speak now. The set which was numbers which were there, which was almost around 4,000 crores as we speak now, is crossed more than 25,000 crores. The number of individual investors, all those numbers are what we spoken about. There's a phenomenal growth that's been seen, and that reflects the mutual funds ecosystem success in handling trust of millions. What enabled this to happen? The one, as a set of campaign which made people aware of 2 things: the investment and of course the risks that are there in investing in these particular funds. The second important thing that enabled us to do the success is technology. Apart it has played a key role in helping push the mutual fund adoption from paperless onboarding to Aadhaar-based KYC. You will see the way in which the KRAs are done. If you are getting your KYC validated from KRA with one mutual fund, your AMC, you can invest in any of the 44 AMCs. It makes it so simple. The mutual fund industry has been a leader in adopting the technology to improve the investor experience. The technology has helped push distribution of mutual funds in far corners of the country where even physical distributors cannot reach. And even the AMC branches are also not there. They are also able to reach to the investors because of this technology. And it also helps in keeping the cost low. We are looking at, as we speak now, there are 6, we can invest for 500 rupees, but we're trying to push it down to 250 rupees very shortly. we are working on that and very shortly we come to introduce this smaller amount as well. Disclosures, one of the important things that I believe, and of course Mr. Narayan has even spoken about, is the trust of the people. As long as you are transparent, the trust of the people is extremely important. We are holding the money of the investors, and therefore that becomes extremely important. And disclosures, Mr. Narayan, I do agree with you, there are certain areas which we need to improve on, but this is one industry along with you, because I do travel across the globe. We had a recent meeting of all the agencies in Dublin, and I was talking to the people. Trust me, this is a fact. The disclosures that we do in the mutual fund industry in India are far, far superior to what is being done across the globe. We talk to US, we talk to Canada, we talk to anywhere. But I can be sure, and I do agree with you. But one of the things that is extremely important was Mr. Narayan, very clearly articulated, is a stress test to be done. And you all know that we have started that process. We do the stress test within the industry. We self, I've said myself and one of the agencies before coming into AMP. The stress test is done for all equity and debt schemes. But one of the important things that have happened last year was there was a fraud that was coming. If you remember, last time Mr. Amarjit Singh was here and he was speaking at the same conference, and there was a time when the disclosures were made mandatory. We are doing a disclosure for small and big cap, where we talk about the stress test, the time taken for them for us to liquidate 25% and 50% of the whole scheme that has to be liquidated. How much time is going to take? What is the volatility in this particular scheme? What are the valuations? What is the concentration of this particular scheme? Both on the asset side and the liability side. The disclosures are being made every month. We would like to take it forward, sir. And in fact, I also principals also did talk about stress test to be made in respect of all schemes that needs to be disclosed. But trust me, be it in the form of monthly fact sheet, be it in the form of giving you NAV every day to all the investors knowing what is my investment today, what is my value, where am I invested? You put your money in any bank, and I was a banker for 7.5 years. You put your money in deposits, no bank tells you where the money is being put in, which company is investing in. But here is a fact sheet every month. The mutual fund industry comes out and discloses where and how much is being invested in which industry, which company we are investing in. So the disclosures are there, but I do agree with you, sir. We need to do more, and I've taken note of it. We will definitely see to it that risk-o-meter is a unique thing. Yes, I do agree again that we talk about the high risk, medium risk, and low risk, but it needs to improvise and add other factors. We will definitely see that there would be an improvement in the next 6 months. So I don't need to promise you in 1 month, but 6 months, I'll take it as my work, and you will see that it's implemented. The way forward, while we see the growth, the phenomenal growth, each one of us are extremely happy to see the way in which, in fact, I feel proud and my goosebumps will come up when I hear Prime Minister talking about the way in which the assets under management has grown from 10 lakh crores to 60 lakh crores. In his recent speech also he did mention about this particular data. But is that enough? And that's what our speakers have talked about, saying that we are only, as we speak now, as a percentage of GDP, we are just around 8%. We need to grow to 35% and go forward. We're looking to take it to what the global average of 65% is. We are looking at the numbers, 5.2 crores. We felt proud of saying that 5.2 numbers are good enough. But you look at the number of Aadhaar or PAN numbers which are linked, look at the number of OTT customers. These numbers speak that they are all tech savvy people. There are more than 55 crores of people are using it. And therefore there is a scope for us to increase the numbers. Look at, we have distributors, we are all sitting, part of some of you are sitting here. Around 2.5 lakh people are doing distribution of our products. We need to increase those numbers. We're looking to increase them to 10 lakh crores. So what is the way forward? What is that we are going to do for this? The industry aims to expand the mutual fund base by focusing on undeserved, underserved Tier 3 and Tier 4 markets by introducing low ticket sales, which I talked about this now. We're looking how to reduce the amount from 500 to 250. We are looking into the role of the mutual fund distributors. We are ensuring that the feet on street governs. You will have seen the advertisement that we have started, mutual fund distributors IEA, that issue. And also, for the first time ever, we said that as an industry body, let us recognize the distributors who are doing extremely good job in increasing this particular industry, communicating the rest. So we have launched this particular program, Partners in Excellence, just last week itself, and we are going to felicitate the distributors in our Mutual Fund Summit, which is going to be held in the next first quarter of the next calendar year. We are also tying up, in fact, since the distributorship has to be done, and then we need to see to it that we reach out to the last mile. We are tying up with ONGC so that the products can be sold by the even there are stores, but we want to put guardrails. I'm not like to dwell on that, but we want to ensure that the proper guardrails are there to ensure that the proper products are being sold, but it can be spread across the country. Another important factor is to ensure that these distributors act in the best interest of the investors, avoid mis-selling and promoting suitable products depending on the investor's risk profile. So we are conducting the training program for the distributors. Mr. Rao is one person. I always look towards him. He's a brilliant way in which he goes across the country to teach, explain the distributors and all the investors. And the AMP also we're trying to develop and do it accordingly. In fact, SEBI, AMP and NISM, Mr. Krishna is here. We have joined together to implement a comprehensive banking and financial services skill development program in the Union Territory of Bengal last year. It was successful in Srinagar. We are initiated in Jammu. And one more step that we have done is, and all the MRs together decided that they will adopt some states. AMP is adopting 3 states, Andhra Pradesh, Meghalaya, and Bihar, to secure that we conduct investor education and business programs, bring in more distributors into the night. All other MRs are witnessing things. The other thing that we are doing again is entering into tie-up with the universities so that we can get hold of the people at the time of education itself. We're taking it a part of the curriculum. In fact, I have had an interaction with Delhi University, with the Institute of Staff College of India. With various other universities, we had interaction. We're trying to make it as a part of the curriculum so that the people, they become aware of the investments, financial literacy improves, and B, if they want to come into the industry, it will be easier for them to do it. See, the chart of the next phase of growth, and in order to do this, one other thing that we have also done is we have engaged we have engaged a global management consultant to help us to set the vision of the Viksit Bharat and identify the necessary steps the industry and the entire ecosystem needs to take the mutual fund industry to a greater heights. We are working with them for easier investor onboarding, B, increasing distribution network, C, ease of doing business, financial literacy, enhancing in-house capabilities on research and technology. This is one point again which I will talk about. To begin with, we already entered a tie-up with one of the rating agencies to come up with the analysis. Offline, I think you will see, otherwise I'll send some of the reports. Every month we come up with an analysis of how the investments are happening in Tier 1, Tier 2, Tier 3 cities, main ratios, what is the pattern of investing of the people, monthly, quarterly reports. We are going to come up with a fact sheet. There is so much to do. I don't say that we are doing much. There is so much to do, but yes, sir, I take your point about doing the analysis more and more analysis and giving it to the public. But as we speak now, I would request you people to go through the AbbVie website where we publish every monthly report, quarterly report, and annual report as well. But we're going to come out with a vision statement in the next summit that's going to happen in the next first quarter of the calendar year. I would like to end my speech. I mean, we're going to do we are not complacent. The teams have done a great job till now, but there is so much we can do. I mean, for us to achieve our vision, for us to achieve the vision of patient power, having financial inclusion to financial well-being. I remember one of his greatest words of Steve Jobs, who said great things in business are never done by one person, they are done by two people. And it's in this journey to achieve our vision of patient power, we must work together, regulators, financial institutions, and investors alike. And AbbVie will continue to innovate, educate, and supervise, ensuring that mutual funds remain a reliable and inclusive investment vehicle. We believe that we can transform India into a financially secure and prosperous nation. Let us all play our part in this journey. Let us all play our part in this journey towards a brighter, vision path. Thank you. Namaskar.
Thank you, our guest of honor, for the remarkable special address. May now request our next special guest, Sri Shashi Krishnan, former CEO of NPS Trust and Director of National Institute of Securities Market, to deliver a special address on empowering India through the national literacy. Thank you.
It was a good thing you're speaking right in the middle is that you had experts like I just said, already sort of covered. I mean, 99% of what needs to be covered is in conversations that we have. So that makes my job much easier. But I've often wondered, what does financial inclusion mean? Because I think the theme of this summit is financial inclusion and moving from financial inclusion to financial well-being. And the way we commonly understand financial inclusion is giving people access to effectively use in an affordable and reliable way financial services. That's how most of us tend to understand financial inclusion. And the way we measure financial inclusion, especially in a country like ours, very often is through counting the number of people who have been sort of included in the banking system. Right? And therefore, we quote a large number of, there are numbers that are there. 78% of the people in India have bank accounts. And assume that, the population of 144 crores, the population that's about 850 that typically have a bank account would take it to something like 100 crores. It's like around 78 crore people in this country have bank accounts. And then we go on to say that around 52.56 crore accounts have been opened in the Janadhan Yojana. And a large number of those people have, are women, 50% of those people are women, and therefore, we sort of made great strides in financial inclusion. And then there are a lot of other statistics, that give us statistics in terms of mutual funds. We have Pradhan Mantri, Suraksha Bima Yojana, 44 crore people of that. The Pradhan Mantri Jeevan Jyoti Bima Yojana, 20 crore people in that. The Atal Pension Yojana, where we are almost 6.7 crore people in that. So, these numbers look very, very impressive. But I just took a step back and said, if you've got a population of 144 crores, and you've got 78 crore people who are banking accounts, how many people actually have dropped out of the system and don't use those banking accounts? And we find that almost 20% of the people who are supposed to have banking accounts don't operate those banking accounts. Which gets us thinking as to why is this happening? I mean, why are people not effectively though they included in the financial system the way we look at it, actually sort of operating those bank accounts. And I think comes back to a very, very simple fact that we need to look beyond this understanding of financial inclusion. And that takes us, if you take a step back to financial literacy and to take a step forward to financial fluency. I didn't want to introduce these two terms because I think they're very important in the way this country will go. Because unless we get the backward linkage to financial literacy and the forward linkage to financial fluency, a lot of this financial inclusion will actually make no sense. And that's what I thought I would sort of briefly talk about, in this, session today. And what do we understand by, financial literacy? And I think that's a question that all of us will have to sort of deeply think about. And it is about, the ability to understand and use financial skills to make, informed decisions about money. And let us understand that everybody doesn't have the same relationship with money as maybe you have or I have. If you go back into Bharat and we talk about visit Bharat, the relationship that people have with money is very different from the relationship that many of us would have with money. And I think it is very important for us to get down to that level and try and understand what is their relationship with money. Because if you are coming, for example, you're an aspiring Indian and you're coming from a lower middle class sort of background and moving up in life, the way you look at money and the way you sort of save, the way you invest, will be very, very different from many people in this room who come from a different sort of relationship with money. And therefore, I think in the context of the Indian ecosystem, I think it is important to understand that most people in this country, and if you go beyond this room, they have actually very limited resources and very limited skills too, to appreciate the complexity of the financial ecosystems and dealings relating to money. And therefore, I think it's very important for all of us to actually get down to understanding, how do we deal with making these people part of the entire financial ecosystem. And therefore, if we really need widespread financial literacy, I think we need to engender confidence in the financial ecosystem. That's the first important thing. We need to get back to this different data that the financial ecosystem is not something we need to be scared about. The financial ecosystem is there for you, is there for me, is there for every Indian. And therefore, we need to engender that confidence initiative. I think the next important thing is we need to protect the consumers, because most people don't become part of this financial ecosystem simply because they're scared of it and they don't believe that their interests will be protected. And this is more so in today's world where people with let us say limited knowledge of the financial ecosystem tend to get sort of taken for a ride by unscrupulous people in this sort of short chase. And the few other reasons why we have the problem that we need to tackle this the whole problem that we face today about lack of literacy, financial literacy. In my opinion, 2-3 things. One is that there is increased life expectancy. And because there is increased life expectancy, it is very, very important that people learn how to not only save money but also invest money so that it lasts them over a much longer life. And that I think is going to be crucial for every section of society that we have. The other important thing that we should also important understand is that India has now become an aspirational society, and unfortunately, as aspirations keep increasing, greed also keeps increasing, and because greed keeps increasing, people look for, short-term solutions, what they believe are money-making solutions, and therefore get, misled and, tend to get into deep trouble. So I think there's a very, very strong need today for us to look at financial literacy in a more comprehensive and holistic manner. Looking back, India has been a nation of savers. I don't think India has been a nation of investors. And I think the most important thing that all of us in this room and people associated with this ecosystem need to do is to convert, what is essentially a nation of savers into a country of investors. And that is where I think, this becomes an even more difficult task, because it is easy to open a bank account. It is easy to sort of make people to put some money in the bank account and save, but it is very, very difficult to make them take that next step and move from being a saver to becoming an investor. And to move from being a saver to becoming an investor requires a lot more effort in terms of, equipping them with the right sort of information. And once you make them a nation of investors, I think the challenges that you have to do is, one, help them prioritize their individual financial goals. There are very, very few Indians who actually prioritize their financial goals. What they tend to do is, whatever surpluses that are left at the end of their sort of working day or working month or whatever it is, they tend to allocate it very, very randomly. And I think one of the big challenges that we as people who need to push financial literacy in the country is to have them prioritize those financial goals and allocate your assets. And as some of our previous speakers talked about, allocate to risk assets, because that is the only way that they can generate wealth for themselves in the long term. And teach them the basic, concepts or the power of compounding, the risks of inflation and so on. So it is not going to be as easy a task as learning financial inclusion. And we really need to get financial literacy to get to be widespread and move beyond that 27% which I was talking about, to cover the entire 78% of the Indians who have banking accounts. The space that we need to cover is going to be very, very, very big. And so when I got back to thinking about, what does financial literacy actually mean for the person on the street? I actually looked around and I found that I have an example right there in my own house. I have a woman who works for us at home, and she helps us in all our household. And she comes from a little village in Chhattisgarh. And believe me, she has no formal education. She comes from an agrarian background. But I'm simply amazed at the fact that she actually exhibits what financial literacy means to a person who comes from that kind of background and how to get transform the life that they have. So the moment she came into work for us, I think the first thing she said is that I don't want to pay in cash. And I think that's a very, very smart thing for a woman to say, because invariably, if you pay them cash, all that cash goes back to the husband, and you know what husbands do with that money, right? And I was very surprised because I said, here is somebody who understands that if I need to, sort of have control over my own livelihood, have control over my own earnings, then the only way I can do it is to ensure that I put this money into the banking system. And she had already opened by then a general account. But what actually intrigued me was the way she went about budgeting, because when we talk about financial literacy, we really don't go back to people and tell them that budgeting is the most important part of budget. You cannot identify your surpluses, you cannot convert them into savings, and if you cannot convert them into savings, you cannot convert them into investment. So budgeting becomes the most important part. The way she managed her budgets was, spectacular. So she came and told me one day that I identified just 4 things that made her most of what I know. They are housing, education, transport, and food. And she's, what do I do to manage this? So I said, what are the ideas that you have? So she said, as far as housing is concerned, what I tend to do is I have contracted with my landowner to clean up the entire building which I live in. And for that, she gives me a 75% break on my rent. So she straight away saves 75% of what she would otherwise have been paying on rent. As far as education is concerned, the thing is she is actually put her daughter through university. Her daughter just completed a master's in JU, which is extremely surprising for somebody who comes from that kind of background. She said, I looked at every scholarship that the government offers, the government offers millions of scholarships. And I've availed every one of them to put my daughter through school and college. As far as transport comes, I used to live in Delhi, and the government was kind enough to make bus travel for women free, and she uses that. She uses that to move wherever she wants to move. And finally, as the last coach, a brilliant idea. What she said is, she said that I contracted with the Telawala outside that every day in the evening, whatever he would otherwise have disposed of, he could sell it. He sells it to me at 25% of what he would otherwise have sold it. So this is budgeting in the true sense of what Bharat wants. Teaching them how, if you got, earning say 25,000 rupees a month, how is it that you can actually, meet your entire expenses with 5,000 rupees? It was exactly what she was doing. But she did a very smart thing. All that money that went into a bank account for expenses, she had an arrangement with the bank to transfer that entire amount into a fixed deposit. So she didn't even see that money, but into a fixed deposit earning us 78%. And she also then, opened up one of those Mahila Saman savings certificates because she came back and told me that this is giving me a higher interest. That is, again, something that tells you that when you go back to Bharat, this is what you need to be talking to them about. You need to be talking to them about, the various schemes, the Jeevan Jyoti schemes, the Jeevan Bima schemes, the Mahila Saman scheme, because they're all there for us to take advantage of. Simply people don't have the literacy to sort of, understand and take advantage of them. And that is why I think that there is a very clear case for us to approach financial literacy in a very, very different way. When we did, a financial literacy course for Bharat at ICC, we went back to the drawing board and tried to understand for ourselves what is it that we need to do. And we said there are three things that we need to sort of tackle. One is we need to give people financial independence. We needed to enable them to make informed decisions about their own financial needs. Second is we need to enhance financial skills, and that's where I came to this concept of financial fluency. Because it's not just enough to have financial literacy and get included in the financial system. You need to know how to use your financial skills and your inclusion in the financial systems to make life better for yourself. And that is where financial well-being will come. And financial well-being will come unless we move people from financial literacy into financial fluency. And I think the last and most important thing is reducing financial stress. Because I think the biggest stress that aspiring India will face over the next couple of years is financial stress. Because aspiration levels have gone so much, people have forgotten what their needs are, people have forgotten what their wants are. They will definitely live beyond their means, and that will induce significant financial stress. I think one of the most important things that is there for each one of us to do is to how to ensure that we can equip them to handle financial stress. So what I will leave you with is, if you can do it, I mean each one, and we will have a financially literate Bharat, in the next 1 year, 2047. Thank you so much.
Thank you, sir, for your special address. There is one announcement. Ladies and gentlemen, we are grateful to have our special guest, Mr. Joydeep Roy, partner PwC, Indian Financial Services Advisory Leader, and Global Health Insurance Practice Leader with us today on the dais. Welcome him. Thank you so much. May I now request Mr. K. Rao, EVP and Head of Investor Education and Distribution Development from Aditya Birla Satellite Games Limited to deliver his special address on the topic Shikshit Investor for Vikshit Bharat. Over to you, sir. Thank you.
ওনার পিপি এটা চাকরি নেই ওনার এটা পিপি এটা পিপিটিটা নেই ওনার না ওডিএম কাটে রাখো ये साउंड है ये तो नहीं आया जो तो नहीं आया इसको छोड़ दे मेरा रिमोट पड़ा नहीं होना जैसा ना मेरा रिमोट पड़ा नहीं होना नहीं No, sorry. Satu. Asli boleh. Asli boleh. कैमरा चला जा रहा है कैमरा चला रहा है कैमरा चला
I'm sorry for this inconvenience. Quickly, this answer that was said. I'm sure there was 15 minutes time start the Chinese early, and you have to cut sharp a little bit. And respected dignitaries on the dais and very loving audience, delegates on the dais, friends from media, friends from industry, friends from my community, friends community, and investors. For me, it's a glad to be here, and it's also it's a privilege and it's an honor to be amidst of the great delegates and dignitaries. And for me, again, it's a coincidence coming to Kolkata. I always say it's a city of joy, but it's a joy for me to be here. Simple reason being, I'm an alumnus from IMC. I'm also from the mission of Ramakrishna Mission, and I was supposed to be a monk in Ramakrishna Mission. Unfortunately, my guru Ranganathananda said you are not qualified. You have to go back and do something. Probably I have taken that as a missionary to spread the financial literacy. Again, thanks to the mutual fund industry, thanks to my boss, and it's over the last 11 years into the just the business of enriching the lives, business of empowering people, business of educating, and it's and incidentally, probably I can say, Venkat sir, and over the last 10 years, I'm part of family financial literacy. Before mutual funds are here, and after mutual funds are here. Now mutual funds are here, mutual funds are alive, mutual funds are here. That's where the journey is on. And I thought the topic, no coincidence in the financial education, and then after listening to and said, taking the instructions in the hand, today we are fortunate enough. There are 3 things that are working for very well. The first P is a progressive economy, second P is pragmatic government, third P is a proactive regulator. And this is making this India on the Viksit Bharat, and the vision of Honorable Prime Minister. And this education, I'm glad at 16th Summit I could make it. It is the last 4 summits. Somewhere there is an invitation, and every time I have somewhere else in the country for some program, I couldn't make it. I'm so glad. Thanks for ICC for inviting me and making me here part of this 16. And 16 comes as always a sweet 16. And from here, another 24 years, where 2047 is the country. And 1947 the country, we moved from the painful era to the era of surviving, now to the era of thriving. Probably by Vision 2047, not that we need to, I think this part of the Bengal work will not for the independence. And the next part of 2047 would be the financial independence for everyone. That should be the mission of everyone. If you are a part of this community, you are a distributor, you are an advisor, you are a coach. I have wonderful friends around. I have my boss, ex-boss, Mr. Jagdeep, and my good brother Vivek, and I have my PGP friend. It's like it's glad to work with each one of them, and I have problem. I'm glad. I think I take from Mahatma Gandhi, who said, "Live your life as if you die tomorrow, but learn in such a way you live forever." And incidentally, we are in a country, we are going to live forever, having the prosperity, the generation after generation. And we need to look at, I think, it is like Warren Buffett when he says, the more you learn, and there is more you earn. But it always he says, risk comes from not knowing what you are doing. Probably this is what the risk which Anand sir spoke about. And we need to know what we are doing, why we are doing, and we need to do it. I think it's most of us we are great our formal education, and formal education always gave us a living. But financial education will make us giving the fortune. And we are in the era of Viksit Bharat, how we can get their fortune right. And taking the clue from there, and this is making the clue. Today we are in the world. One side after the COVID we had an influenza, and post-COVID there is another thing is happening in the financial market is influenza. There are influencers everywhere. We need to be much more beware because they think away. They are the one who influences on the wrong side. This is where I think Shishisa spoke about the goals when you have, then you know where you want to go. I think it's why it's a good right, voting rights again. It's like knowing nothing is nothing wrong. But you know nothing and you feel know everything, then that's the most dangerous and most in the financial markets. This is where the SEBI last study of F&O it says. 3 weeks back I was in Chennai doing a program that meeting now, which is called Money Gurukul. And we met a boy who is coming from the college from local Chennai. And he was telling, and sometimes with a lot of humility and sometimes with ignorance. And he says, he filed his income tax returns little over 38 lakhs as a negative loss this year, and it's parental money he lost in F&O. And he comes back and asks me a question offline in the midst of the sports session. What shall I do now? Do I need to trade or do I need to invest? I said, if you are trading, already you are in F&O, and your F&O is there is no future and there is no option for you. All that you need to do is go back and invest in your studies, and investing in yourself can give you better returns. That's what I am practicing inside of it. That's why we can look at it. And coming back on the Viksit Bharat, and the Viksit Bharat is Honorable Prime Minister's vision, Viksit Bharat, but it is a mission of every one of us. And we are at a stage where it is, we are moving from a stage we are aspiring, we are dreaming, and we are making it. How it is going to change us? What is going to change us? In 1992, I was appearing for my UPSC exams. My final, second time I was writing my finals. And that's the main exam. And there is always used to be one question which used to write about, you need to write about Indian economy, essay about Indian economy. That used to be common. And most of us are going to talk about the economy, that essay, 500 words you need to write. And the first time we always write is, India is a developing economy. And and this year, incidentally, my son is appearing for UPSC. I was just going through his material, and then he was looking at Indian economy, macro and microeconomy when he's writing. Probably the first, not first sentence or second sentence, it is going to be, he writes again, it's that India is developing economy. But fortunately, it would be, praying God, everything goes right. In 2047, his children coming and they are appearing for UPSC. Probably that is the time they write India is developing economy. That is the journey where we are transitioning. We are waiting for the decades and it's going to happen for us. And it's not just a vision, it's not just a dream, it's not something, it is a micro print. Last week I had a privilege at ISG with the, I had a privilege to interact with the media chairman, Subramanian sir. It was such a wonderful thing. And there are 10 key drivers which they are working in macro to micro, how that can work for us. What is that is going to change? It is not just a dream, it is a vision, but it's a plan it's going to get accomplished. And what is going to change? Today we have an aspirations, but there is an action plan for the aspiration. We have a dream, then you work for that dream. And how you need to look at it. There is a demographic limit, then there is a skilling of youth which is happening. A lot of things are happening from AMP. I think Venkat Sastry spoke about, it's MMT issue is one part of it, working with the distribution, working with larger universities, second part of it. And myself coordinated with over 39 universities. I run a program called My First Paycheck for the college students. And we are just getting them, skilling them, and doing it. And today we are looking at the economy with a stable growth, and we are looking at whether the PLI is working for us. We are a center of the global supply chain. Then we are working on using the AI and digital technology. Probably the buzzword in the globe is AI. Buzzword in India is AI. That AI is aspirational and aspirational India. And there are 4 pillars which are working predominantly for us. And what is that we can look at? One is the GDP of the country is expected to grow 7 to 8 folds. And second, per capita is expected to go up. Means we have a huge opportunity to work, and there is a market which can expected to do well, and then we can get. But what is going to happen, I think, is Shashi Sarun has been when the retirement, your life expectancy is going up. When your life expectancy is going up, there is a pain, there is a pressure. Pain is that you are living longer. Pressure is you are living longer. Pain is if you have not planned, then it is going to be miserable. Okay, that's our onus of responsibility of all of us here to ensure that India, where we do not have a social security, where we can work and we can work together, how that can get. I used to work for Indian Railways, and I was getting out and I was joining a private sector. I started my journey with Unit Trust of India. And incidentally, I had a privilege to work with most of the regulators, chiefs. First mutual fund regulation of 1993. I was typing on a piece of on the typewriter, and it is none other than G. Ramakrishnan who was sitting next, and he used to guide me what I need to do, and I need to take a manual and convert it into that. And then we have seen these 2 basis points which are coming in. Thanks to UK Finance Act at that time, when we were looking at how this is changing the mutual funds again. And then how we need to work towards what is going to change. And how the goal plans and goal posts are going to change. We are living longer, what we need to do, our capital income is going up, how we can get back savings into it. I think in 1963, when Mutual Fund Act has been passed, I think we then Finance Minister, P.T. Vishwamacharya was present in this bill in UK Parliament Act in 1963. There is one word which he says is more meaningful and more, is visionary things which can reveal now. He says the common capital market benefits to the common man for the mutual funds. And today that is happening. That's where the SIP, the revolution of SIP. We call that SIP also, which is coming everywhere. I think either it's a campaign or it's an education or everyone is taking around. The number of folios number, I think it's equivalent to 10 more SIP accounts today. We have 5 more unique investors. And we need to do, this can go much more. Then it's not that journey is not always safeguard, it's journey is you have a short-term variables and structural growth drivers. Markets are always in the short term, it's like a voting mission, in the long term, it's a paying mission. We need to look at what kind of risk we can get there, but how we can educate and, when markets are unpredictable, only thing we can do is getting that long-term growth drivers can working for it. And this vision, this growth of economy can come back to a common investor. This is where the investment thesis can be done. And this is where we can make investor a smart investor. Not the smart investor who got a specific measurable, achievable, reachable, and time frame goal. But that smart investor for me is S stands for the Shikshit investor. Second, M is the managing volatility. Market is always volatile. How you can manage? And managing the volatility of the market, you can't managing your own emotions. You need to manage that. I think most of the distributors who are here who play a vital role in managing those emotions. Third is the asset allocation. That plays a very vital. It's like de-risk you so much, and we do not know this as a class can work for you. And Anand sir was talking about putting the risk before the returns and educating the risk about it, risk versus return. How you can use the risk, how you can make the risk work for you, and what you need to do. And the last, the T is the time in the market, not time in the market. None of us can time in the market. Then SIP probably the best way to time in the you are there always throughout and you are investing. And I call retail companies GDP is going up and then do this education program. I ask the people, how about your GDP? I'm not talking about gross domestic product. I'm talking about your own goals, your own dreams, and your own plans. You work for you work for your family, and you work for your well-being. How you need to do? Today's topic is financial inclusion to the financial well-being. And we need to move a little more, we need to look at holistic well-being. And it's how we can get that goals right. And goals without plans are like, we are in a wandering desert island. How I can set that goals right. I have my friend from BGP Academy, that is in goal planning. Probably this is going to be a lifetime job for every one of us. And true GDP can become for us is you have that goals, you have set that right, and you get that needs right, and you have an action plan. And today's time is there for us where we can plan. Probably 30 years back, if we are visualizing where we are, probably we would have done some of us would have started career 30 years back, would have done something very different. Today that aspiration is becoming very, very different. And with this, and then we have reduced this chasm, and the chasm of this GDP for us is you need to manage your cash flow, how I can educate the investor on the cash flow, on the allocation, on the succession planning. P is the taxation. Paying tax is good for the country, but saving tax is good for you. How you can manage this. And people say how much loans I can take, how much I cannot take. What is that I can do differently? And last but not least, putting an emergency fund, because that is safeguarded many people during COVID. If I have emergency fund, I have never withdrawn my investments, which are government for me. And there are many things to be versed. And to be a efficient investor, you need to burst many things of it. But I quickly run positive time. And when I do this program at colleges, I talk about the children. It's like one of the session I say life is good. But for me, that life is good is an acronym. LIFE is living in financial empowerment. IS is investing wisely and S is saving rightly. And when it will become good is you have the right goals, you have the return goals. And O is optimally invested. And your O is another O is optimize your risk. And B is diversified. Then you become a truly financially literate. I think that's going to be a life is all of us good. I think we need to make that life is good for everyone. And managing money is much more simpler if I can simplify the concepts. This is what we did at AMC when we have done Mutual Fund Summit campaign. We have each of the lives, we made the conversation with the common man. How the common man can understand mutual funds much better. And it's as I was saying earlier, mutual fund is for the rich, mutual fund is for everyone. And today mutual fund has become mutual fund for everyone to accomplish their financial goals. I call this as the 4Gs to manage money. First is you get your money, all of us we can get to focus where we are today. If there's an extra going to the corporate world, you need to put this investment into the skills so that you can earn more, then you can get more money. Second is you need to grow your wealth because it's a wealth creation journey. You need to safeguard and you need to protect. And second, whatever the wealth you create, third G, you need to guard your wealth, you need to protect your wealth. And the fourth G is all of us here, we have to human the wealth. Here, either to the charity or to the society or to the children that we are passing on. In fact, when I go and ask this question to the college students, it is a workshop at that time. And most of the times our sessions are handled addressed by the placement officer. Placement officer comes and introduces my boys I got this CTC, my girls have got this CTC. Then I ask these boys and girls and ask me what do you mean by CTC. They come back, they get up and say, sir, it is a contribution passed to the company. I said, I have come to contribute, which is owned by a business community, and further the cost comes on the salary, the cost comes on the liability side. If I am giving the cost to the company, you are liability, why should I carry it? Then they come back at the debates, they say that it's because the contribution to the company. I define to them CPC is not cost to the company, CPC is a contribution to the company. But the greater CPC is we are the few people who are into this education and they are educated well, it is our responsibility to contribution to the community. And the last CPC is contribution to the country and contribution to the charity. We are in the city of Kolkata. We learn a lot about the charity from Mother Teresa. So we have a responsibility to do something to the charity. Probably the financial literacy is not your well-being. Financial well-being is well-being of each one of us. Probably we can look at that as a. And financial literacy, to understand ABCD of financial literacy is only 3 letters, BIT. once you understand delayed gratification, impact of inflation and power of compounding. And if you take a dip, then you are taking a dip of financial literacy. If you are not taking a dip, there is another thing will happen. What is, you will get distracted and you will be getting irritated and you will be getting painful. And that's where you need to work for it. And this is the journey of transformation. This is the journey moving from the tradition to the modern. I mean, when you're coming to the city of joy, when you come to the old city, the new farm, you can see change. There is a horror bit of the old, horror bit of the old. And this is where the transformation can move. That journey is coming. As the earlier speaker said, when you put the nation of the savings, how we can make the nation of investing. And investing in the assets which can grow in value, assets which can grow in income. And mutual funds play a very vital role there. I think it's a combination you can get. And in the current scenario, when the markets are golden, your responsibility have a right acceleration is the most important part. Normally, during the good times, we are trying to, we are left to the risk. Bad times, we are trying to the opportunities. And when things are going good, we are not taking that. Our acceleration skew mostly towards one asset class or two asset classes. And we need to put that seatbelt on. Acceleration works like a seatbelt for us. If I was just looking at data, I come from a city called Hyderabad. I mean, there is a road of ORR. In last December, the government has increased the speed of limit 100 kilometers to 120 kilometers. After the 20% increase in the speed limit, accidents have gone up by 240%. And this is where markets are doing good. Probably keep your speed low, keep your assets right, and keep your emotions right. I think our responsibility is to keep the expectations right, set right expectations. And education on this versus return is always in place of vice versa, and this is the time we need to educate rightly. And it's always expectation is a straight curve of markets will always go up, markets will have a low return, high return, and then this is past reality we need to face. We need to educate on expectations versus reality. And every asset class play a vital role. In the short term, if I'm putting my money into the equity and risky, in the long term, if I'm putting money in the cash and risky, how I can manage that? And as I said, time in the market to time in the market. And the last but not the least, we need to look at the biases. How these biases are playing for us. Educating the investors about the biases is the most important part. And these are the anchoring biases which can work towards us, which can work against us, and how we need to get that right. And certain things which are under control, certain things which are not under control. I can't go and ask Putin to stop the war at Russia and Ukraine. I can't do something in Israel and Gaza. But what is under my control is I can increase my savings, I can invest in rightly, I can hire the right advisor, and I can put on my processes. I can think about what information I don't need to consume. Today we have so much of information. Probably City got a wonderful website today with investor education, there is a certification program. In fact, I encourage every student who are coming to me, first you get the certification that says coming at free of cost. Then you have the City Investor Education portal on the app, you have a fantastic education. And actually, we have created amazing content on the investor education. I call www.apple.org is www for visa wealth without worry if you are learning right. And you need to put what is under here control. And end of it, you need to understand between luck and skill. Short term, you are very rich, you will be lucky, but that in the long run, you want to become rich and stay rich. पैसे बनाना काफी आसान है, पैसे बने रहना काफी मुश्किल है. Then you need to develop that skill. And even the luck is for me is a skill because LUCK is labor and the credit knowledge. Even if you are doing that, you need to have that luck. And aspirations are changing, different age groups, different aspirations. Financial literacy is not that I educate one time and I'm done. Financial literacy is making that education to the different modes and different way. We do, for example, for women, we have a separate content, separate thing we work for Bharta as a woman. I had a privilege to go with Vivek Bhai, and Fauci, see how that Fauci Village. We went to Little Over, today we cover Little Over 40 cantonments where we educate Fauci boys in their own language. It's a Fauci and there's an aspiration very, very different. And when I do the retirement workshops, I say, life is good, life is great, in this I believe. How life can become great for is when you are at the retirement stage, LIF is living in freedom and dignified. And how that can become great for you, comfortable for you is G is for your growing campus. Your retirement campus should not sustain that is the end of it. How it can go, how you can make your retirement right. And you should have a regular income, you can sustain your life. And you should have the right estate planning how you can make this. And acceleration is key at every point of time. And last but not least, tax efficient portfolio. Then life has become great. Just before I quote, before it I can quote, Bishop Rabindranath Tagore, age cancers and youth ventures. When you are young, you can take all the risks. When you are becoming old, you need to be, you need to mitigate those risks in such a way where you can sustain your life, and 2047 would be a independence, financial independence to every one of us. By 2047, we can plan much earlier. And that would be our mission. And this is a journey for us. We look forward to that financial independence, where your investment income can outweigh all your expenses, where your salary income can become portfolio income, where your passive income can become much more than active income. This is where we can look at. That's where I call Shikshit investor. So Shikshit investor is Surakshit investor. And we always says educated investors, empowered investor. And Shikshit investor is Surakshit investor. Thanks for this opportunity. I think I covered within 15 minutes. Thank you so much. Thank you so much.
Thank you, sir, for inviting everybody over here how to become Shikshit investor of Exit Bharat. May I now invite our special guest, Mr. Joydeep Roy, partner with WC, India Financial Services Advisory Firm, Global Health Insurance Practice Leader, for his special interest on a very pertinent topic, which is retirement savings, consideration for standard operating maintenance and risk thereof. Over to you, sir.
Good morning, everyone. We have 2 minutes of the afternoon, and it's always a pleasure to come to any ICC meeting. Good morning to all my speakers on stage. Some of the dignitaries. I'm associated with coming and talking on ICC gatherings, and of course, we've been taking part in the award functions for a long time. ICC has been a pioneer in actually coming out with industry awards which do not ask for any nominations, but we look at all the publicly disclosed parameters and awards, which has been a pioneering action for the last 8 to 10 years. So always a pleasure, and probably this is the last financial services ICC function before the centenary. So it's therefore a very important one. Next year onwards, there's going to be centenary functions, which I'm sure will be a great or a very difficult challenge for the organizers to do, because they have to come up with things which will be even more special than what the reason I chose retirement is because whenever we speak of ICC mutual funds, savings, investment, risk, etc., we tend to overlook the element of retirement. The country is very, very young. Our average age is only second to Philippines today in the whole Asian Pacific of population, which is a great asset to us, and that's the demographic dividend that everyone speaks of. The problem is that that's not going to remain so. Compounded with increasing longevity and heavily increasing cost of living and cost of health, retirement savings is going to be a very important area for us to look at. The topic of the conference is financial inclusion to financial well-being. Now, well-being is something that is something which goes well beyond the just looking at today's situation of figuring out how to really fortify oneself through mobilization of savings or disciplined financial investment, because it has got certain things which are which tantamount to foretelling the future, a long future. Why do we think that the average longevity of Indians today is just beyond 70%? But if you take out the infantile mortality, if you take out the families of early challenges, people who are in the bursary, both organized and unorganized, who complete age of 60, they tend to live till 84. So, when we talk of retirement, and remember, these are the people who are also supporting me. Typically, one complete working lifetime supports many people, both older and younger. And therefore, we're talking of the financial well-being and financial future and sustenance of many more than the 7-8 crore organized population. India does not have a formal social security. Therefore, disciplined savings and a bit of leap of faith or understanding the future is extremely important for the overall GDP per capita or sustenance of that or even its effectiveness in managing the costs of the future. So therefore, financial well-being goes good retirement goes well beyond financial well-being. There have been studies which show that if someone has been earning an X amount and retires with this amount, which includes probably a much larger amount of savings than one when they start out their career, still there's a lifestyle drop of on an average of 79 to 85% when they retire. Now, there are many ways to cope with it. Some people are then supplemented by their children, which is a vanishing idea in society today, especially in cities. Then some people go back to a native place where the cost of living is much lower. They curtail their lifestyle, all kinds of things, all kinds of adjustments have to be made. If you think of it really, I mean, is that what is financial well-being? So if somebody has been working for a lifetime, how to maintain the lifestyle that they have been accustomed to? How to really think about inflation-proof income streams? Becomes a very specialized area for investment and investment planning, investment advice, and of course, the whole thought process of individuals. A very crucial part of this is when does someone start thinking? Again, there's been a study about in 2017, which talks about the fact that in India, we do start thinking of retirement on average at 48. Many countries, people think that there is point, right? But the best example is South Korea. The age is 33. So people in South Korea start thinking of retirement. Well, there's a culture of thinking of retirement savings, and it's an activity. Now, I don't need to tell this group full of professionals how much of a difference it makes to retirement planning if you start thinking of it 33. So that's something which is really a very important part of financial literacy, aside from educating people about the financial risks or risk appetite or different kinds of instruments or the whole gamut of financial world that represents our people. And it's an important part of financial planning, important part of financial education, which I think needs real attention. The faster you start, the more likely somebody will achieve it. That brings me to talking about inflation-proof incomes. Inflation is reality, and whatever one plans, if there's no active stream of income, there are passive incomes like interest income or investment income, which is stratified at a particular amount. That's going to run out. That's going to be adequate in any state. So there are many ways of looking at inflation-proof incomes. One of them, of course, is rental income. So why we look at real estate as an investment for growth? India has real estate growth as a growth investment. I think it's time that we may look at how to professionalize the entire rental piece, not dependent on individuals who just rent out the flats, their houses, but how to make sure that looking at something like rental income becomes a disciplined investment, which is respected and is transparent and is risk managed and managed. There have been many other inflation-proof incomes that we think of, but then other than inflation of this cost of living and cost of goods, the thing that people normally miss out, and it drags about more than 60% of our lower middle class category in poverty is rising health expenditure. The inflation in health cost and health, that is medical cost and clinical costs, is way beyond the normal cost of goods in inflation. That happens because of sophistication of medical treatments. It happens because of the awful shortage that we have on doctors and nurses per capita. It also happens because there is a flight to quality, and people are spending more and more to sell their family silver in case of medical emergencies. And more than 60% of the reason of sliding into poverty of lower middle class Indians are health care expenses. So one has to figure out what is the solution. As we all know, health insurance becomes more and more costly as you become older. I mean, just looking at health insurance and the premium that we pay, there's hardly the data sets of the premium rates go incredibly northward as one crosses the magical age of 65 and 70. So that's probably not the only solution. We look at health savings, a category which is currently absent in India. You will do some, if you could manage to construct a health savings account where that's just the combined products, but a health savings account where there's a lot of such bills, and therefore reduces the need for the risk premium to be high when one becomes older, it's probably something like this. And it's not one regulated. It's not only idea. Everyone needs to look at that combined fashion because it is elements of every financial product that we have. Now, it's not important just to look at savings and being able to manage the expenditure. One has to look at how to manage the expenditure. I was very impressed with the story of the lady who went to the Telangana and got the vegetables which were left out by others. Now, if you look at there's a company in the US which does that. It's called the Swiss. They figured out that the large, the supermarkets now they tend to pick the good-looking vegetables, the big ones, the blemishless ones, onions and potatoes. So what happens is they go to these farms and they know that the supermarkets don't want them. And these guys dispose of, they get somewhere. They pick up the misshapen potatoes, misshapen carrots, misshapen bell peppers. And that's that. In order, you get 60% lesser price, some mistakes, and it comes to you. And basically, it's where you have to order what is available. Because they pick up what is available. And it's 60% discount on half. So, in a situation where the cost of food in the US is skyrocketing, heavy, this company is on the niche. And people are ordering from the streets instead of walking into a workforce. So that's a way of managing costs, managing input costs of life, which there will be such brilliant anecdotal examples or individual examples, but do we need to look at it as a part of retirement planning and financial planning? We don't. And again, coming back to the area of health, active health management, managing to stay fit and proper is something which in this country we ignore a lot, and we might look at all the gyms and all, but that's what it is. It has to look good, has to feel good, has to be stronger, fitter, but not for active health management. We don't have a facility for doing things which will keep somebody or rather make the age slower. It's a huge industry globally. It could be clinical, it could be physical, it could also be habit related, or it could also come down to such cases which are very highly involved with sleep and water intake. So, but I just want to leave a thought with you. These will make retirement savings be adequate, not just a higher return. Finally, I'd like to talk about the role that various have to play in making sure that we as a country have a strong culture of retirement savings, think of retirement, and think of life and quality of life beyond the age of retirement. I don't say, I should say not retirement, but the age of retirement. This is about the age of 65, I think age maybe. So the role of the regulators in this case, that is what is the ministry and regulator, would be to actually actively figure out what is needed for the country and promote the growth of such products like, let's say, let's say, inflation-proof income streams, and promote them much more. The development and the role of the individual would be to be on the role of the person who thinks of it should be more open minded. I see whenever anyone speaks of reverse mortgage as a great retirement income tool, people's eyes gaze over. Everyone in the country, this country, want to leave a legacy, want to leave their houses to somebody, the next generation, or even savings they want to leave at just 1/3 of the income. Instead of an annualization of the income which becomes zero at age 90, or even a reverse mortgage when the house passes out of the bank at their death, but gives them the income at their life. It's extremely difficult for people to think of those things. I think which needs to be thought of. That's openness. And between the regulators and the companies and the institutions which make such products and the people who have made plans. Retirement saving is a specialized area of planning. And whenever we speak of wealth management, we speak about investment management, we speak about insurance management, we speak whatever it is. Finally, people are talking about wealth gain, wealth creation, and they're talking about how to get higher benefits, returns, risk appetite, risk management, but very few discussions about actually what retirement savings plans should be. I do believe that as a specialized area, there should be education programs, taught the panels differently, there should be different certifications, and that could build a brand which will also, therefore, interest people to look at that as a specialized area and maybe start their savings much earlier than 48, so that the golden years don't need too much of polishing as opposed to everything else. So with that, I think we have a whole day full of fantastic deliberations, great discussions. I think you enjoyed them. Thank you very much.
Thank you, Joydeep sir, for sharing your empowering thoughts on retirement savings. May I now request our next special guest, Mr. Abhishek Abra, MD of Sara Capital, to deliver his special address on the topic Private Equity, the New Frontier in Wealth Management. Over to you, sir. Thank you.
Good afternoon, everyone. It's a pleasure to be a part of such a distinguished resource here. And thank you, ICC, for inviting me to this conference. And I also appreciate that in a summit which is meant for mutual fund, they thought it is prudent that private equity also be discussed as something that is becoming more and more part of the portfolio asset allocation for a lot of investors. If I were to reflect on the private equity stage where we are, it's a 2-decade-old industry. But from a understanding ecosystem development, regulations, it's perhaps 2 decades behind where the mutual fund industry is. But in terms of assets under management, it is less than a decade behind. So a lot of money is flowing in, but a lot of catch up for the industry to do in terms of understanding. So my endeavor in the next 10 to 15 minutes would be to give you some statistics, give you a sense of where this industry is headed, make some arguments for the industry in terms of why it is likely to exist and continue to perform in some form or shape. And then we can discuss anything specific that you would want after this. So just to put some numbers, the global private equity AUM is about 8.2 trillion USD. To put this in context, the equity AUM of the Indian mutual fund, which is roughly about 22 lakh crores, is roughly about 0.2 trillion, which is less than 5%. So the size of the industry globally is well recognized, and in India it's also taking shape in a big form. And one of the reasons why that has happened is that consistently in the markets, in the public markets also, if you look at the global private equity index, there has been outperformance for this asset class. Now it is a risky asset class, it is something that needs to be well understood, and that's why in Indian regulations we also have a threshold at which one can make investments, 1 crore and above for family to pay out. So it's meant for people who understand the risk, who are thinking long term. And that's why if you look at someone like a US endowment fund, their asset allocation strategy has moved more and more towards alternate asset, which includes private equity as the largest component. Because they've seen consistent returns being delivered, they are not someone who's afraid of illiquidity or long-term holding. And that gives us a power to have some allocation given to this asset class. The reason why we believe that there are returns to be made in this asset class is that if you just look at the overall statistics here, that while there would be about 5,000 more publicly listed companies, including all bourses, the unlisted universe is spread large. Not all of them are investable, but it's a significantly large number to look at and potentially evaluate and benefit from. And some of the factors which contribute to potentially higher returns here. The private markets are significantly less efficient as compared to the public markets, where there are fund managers, there are analysts who are tracking those companies, versus the private markets where value discovery happens and one can negotiate on that much better. So, and that allows you to make that extra alpha, which justifies some of the risk that comes along with the unlisted space. If you adjust it for risk, and again there are different types of private equity forms I would spend some time so that you understand that better as well. But on a higher risk adjusted returns is something that potentially can be delivered once it is well understood from a risk perspective. The operational improvements and active management can happen in private companies. It would never happen in the public markets for minority investors who is putting money. But any private investment would come with a series of well-documented rights that the private equity would get, which would allow it to make sure that the business objectives are not deviated from, no cycling of money takes place, as I said, or capex related decisions also are under control in some cases. And in some cases, the private equity fund itself is managing the company, so far more from the corporate governance perspective, much better. And access to high growth opportunities. Now, if you look at some of the emerging companies that are now coming, whether it is new age companies, whether it is sectors like medical devices, consumables, and so on, they are typically coming now to the public markets, whereas not many deals have happened in the private markets in such high emerging sectors where you get opportunity to capture them. And lastly, if you are a patient investor thinking long term, there could be less volatility and short term pressure with some of the public side. So which would lead to rational decision making in terms of holding of your asset. While it's a little complicated, and yeah, actually the font itself is a little small for the size of the screen, but the way we see private equity is it's classified into three buckets, which is a venture capital fund, a growth equity fund, and a buyout fund. A venture capital, as the name suggests, would typically have a smaller investment in a new company that is coming. It would vary from seed A and so many other seeds until it reaches a certain stage of profitability, the business model being well established, and where potentially growth equity can start funding it. Globally, 30% of the assets under management for private equity resides with venture capital. And in the Indian context, we've seen roughly about 50 to 150 crores as the typical allocation that is done in one investment. It can even go as low as 2 to 5 crores for the first round. And the portfolio is constructed by any private equity manager where they would potentially invest in about 20 plus companies. As it is an extremely high risk, they don't know which companies will pay out over a period of time, and that's why they prefer significantly more diversification than the other private equity classes. And needless to say, more than 50%, and it could be the number could be even higher. It's the money itself is not required. So it does come with high risk, but it can also give you significantly high returns, and that's where it still exists in the global ecosystem and it is. Growth equity is the mid-stage investing. You see this as a pre-IPO or 2-3 years prior to the IPO as well. And this can again vary from 50 odd crores to maybe investment as high as up to 300 to 200 crores in a given manner. The equity stake is roughly about 15%, and the portfolio is constructed across sectors so that you diversify the risk. And but you still have a certain loss ratio that potentially comes if the companies do not go for public or there could be liquidity risk that may come on the side. And the third asset class, which is the largest as far as the global private equity fund is concerned, the market is concerned, it's the buyout funds, which is 50% of the assets under management. This is late stage, where typically large amounts in India on an average about 2,000 crore is where the average number sits in terms of the deal making that buyout funds do. They will start at about 500 crores and can go as high. In fact, there is really no number given them the amount that is taken, particularly with the bulge bracket funds. And it's developed as an asset class which provides liquidity to businesses, families who are not interested in taking their businesses public. So it has a role to play in any ecosystem. It has a role to play in terms of certain emerging sectors, making sure that they come up as well. And that's how this asset class has emerged over the years. Relatively lower in terms of risk profile, given it is a late stage investment. These are some of the names that you may find familiar. I don't want to call them out, but the global names who are operating across the globe are also very actively operating in the Indian markets across the VC, growth equity, and buyout ecosystem. There are Indian homegrown funds which have come up over the years in the last couple of decades, and they continue to come, which again across the segments. The estimated number of funds are significantly higher as far as venture capital is concerned, and it reduces as you go towards the buyout funds, where the operating capabilities also come into play as compared to the investing capabilities. So that's how we see the landscape here. Now in India, roughly about 1,300 AIFs are registered as on 31st March 24. And the regulators have classified it into 3 buckets of category 1, category 2, category 3. A little complicated for most of people to understand. Private equity would sit somewhat in Cat 1, Cat 2 as well. But category 2, which is where private equity would have the maximum presence, I guess is about 79% of the AUM that AIFs have raised in date. Though it is clubbed with some of the other funds like real estate, which is a different asset class, also with some of the structured finance related assets as well. So it's a mix of everything. But if I want to further build up and look at in the last 2 years what alternate investments have invested in this country. In the last 2 years, about 75,000 crores of investments happened from the alternate investments on the equity side, of which private equity investments was roughly about 60%, balance being real estate and infrastructure driven. And these are large numbers if we put in context that the mutual fund SIP in the similar period was about 44% of what the alternate investments that were made in the country. And within the private equity investments that have happened, we've seen growth and buyout as the more prominent in terms of allocation, and we see after that. It's interesting, as you would have also seen, that more than 1/3 of the companies now going for IPO. This is again 2020 to 2023 statistic. All the main board and S&P put together, 1/3 of the companies were private equity funded. So a lot of what is coming in the public markets incrementally would be invested, and private equity is likely to be an investor in those companies. Just 2 minutes about Sonara Capital in terms of what we do. We've been around for since 2007. We are a mid-market focused buyout fund. Have invested more than 10,000 crores of capital, delivered good IRRs, but more importantly in a consistent manner. And some very unique and interesting deals with respect to partnering with Amazon in the country. One of our companies called No Retail is a hybrid company offline and online powered by Amazon, is emerging as on the grocery side as a leading company there. We have an association with Yum Brands, which is a master franchisee. As Sapphire Foods, we have an association which is a listed entity as well, Sapphire Foods. And Iron Mountain, again, a global leader in records management, has been a partner. So very different type of deal making that happens in the private space, which otherwise public markets investors will not get access to. So what we firmly believe that mutual funds are definitely sahi hai, private equity bhi sahi hai, and I think it needs to be well understood. And if the risk is something that people are willing to take, there is a difference to it. So thank you very much for your time.
Thank you, sir, for your special interest. May I now request Mr. Julian Roy Chaudhary, sir, former member of LAC IRDI, Mentor of Insurance for ICC National Expert Committee of the USN, for a formal vote of thanks, please. Would you, sir? Thank you.
Very good afternoon, friends. We have a very eminent members of the dais, very distinguished members of the dais. I would like to add one more adjective, very brilliant members of the dais. And they have been giving their deliberations on this beautiful topic of mutual funds for the last 2 hours. My job is to give a vote of thanks. It's difficult to give a vote of thanks to such a brilliant audience also. Mutual funds are something, let's look back 10 years back, what was mutual fund and what it is today. Mr. Amakumar Gopalakrishnan has given a beautiful talk on what it was and what it is today. 67 lakhs AUM. I must thank ICC and particularly Mr. Sen for initiating this type of discussions. Mutual fund, and there is one more which Mr. Sen has done. He has brought the banks also on the ICC board.
So friends, I extend my sincere thanks to our chief guest, Sri Anand Narayan Gopalakrishnan, full-time member SEBI, for being present here today despite his busy schedule. I'm also happy that he flew in from Mumbai to his old beloved city of Kolkata, where he was born and brought up. My special thanks go to our guest of honor, Mr. Venkat Nageshwar Chalasani, Chief Executive MP, for his presence. My heartfelt thanks go to our special guest, Sri Shashi Krishnan, former CEO NPS Trust, Director NISL, for his gracious presence and kind deliberations. What a wonderful thing he spoke of was financial fluidity. My special thanks goes to our special guest, Mr. Joydeep Roy, Partners PwC, India Financial Services Advisory Leader, and Global Health Insurance Practice Leader, for his presence despite his very busy schedule. I mean, he is more in the air than on the chair most of the week. I also want to extend my sincere thanks to Mr. K.S. Rao, EVP and Head of Investor Education and Distribution Development, Aditya Birla Sun Life Agency Limited, and Mr. Abhishek Kabra, Managing Director, Samara Capital, for their kind presence. I like this word, Mr. Kabra, ended with A B sahi hai, O B sahi hai. Beautiful. You know, these are the things we should get when you attend such beautiful conferences. I thank Mr. Atul Sen, Chairman, ICC National Expert Committee, BFSI, and former MD and CEO, SBI Life Insurance Company Limited, and former Deputy MD, State Bank of India, for joining us. In fact, he gave a very big lift to the SBI Life when he was CEO and MD of SBI Life in Mumbai. I also thank Mr. Arun Latta, Co-Chairman, ICC National Expert Committee, BFSI, and Director, JR Nadda Financial Services Private Limited, for joining us. In fact, Mr. Latta's father and I know Mr. Latta's father, we were very good, well-known friends long time back. I would like to thank our friends from the media for being present here and widely covering today's conference. On behalf of ICC, I would take this opportunity to acknowledge the support of our sponsors and also concern present here for the support and cooperation and making this initiative a grand success. I think the session could successfully address the key issues and scope associated with investments in mutual fund industry. Here I would like to highlight a few salient points. In a deposit-dominated market like India, it is important for mutual funds to be able to offer differentiated risk rewards and gain shelf space. New product development in mutual fund space needs to match consumer profile requirements and return expectations and risk appetite. The advancement of technology in the wealth management business has revealed more accessible answers to complicated fiscal difficulties in the whole financial landscape. Investors and advisors now have access to environment that enables them to use cutting-edge technology to manage their capital better. There are a lot of software also in the field for making investments easier. Mutual fund industry needs to target an increased share of the retail investments through expanding the line of innovative mutual fund products. In addition, the mutual fund industry needs to focus on deeper penetration by expanding its presence in almost all bankable urban and rural locations. The escalating digital penetration and the proliferation of user-friendly online platforms have engendered unprecedented convenience, enabling investors to seamlessly access and engage in mutual fund investments. The confluence of rising investments, digital progress, and both the governments and the regulators' unwavering support and initiatives aimed at bolstering financial inclusivity has nurtured an expansive investor base. Really, I mean, the way the mutual fund industry has grown is enormous. I never used to invest in mutual funds long time back. Only after retirement I started investing. And some of the funds have really fantastic returns. India's rising millennial and youth demographic presents a vast opportunity for the mutual fund industry. The adoption of fintech solutions will not only enhance accessibility and convenience, but also redefine its landscape, making the industry more inclusive and efficient. I like one word of Mr. Venkat Nageshwar Chaudhary when he said that in India, we are more transparent in the mutual fund industry than even USA or the European countries. It's actually a fact. In fact, whenever we see an advertisement of mutual fund, always it is written at the bottom. It is subject to risks, market risks. The commendable regulatory environment under the aegis of the Securities and Exchange Board of India (SEBI) has galvanized investor confidence through comprehensive reforms aimed at transparency, safeguarding investor interests, and fostering industry growth. In fact, I was in a meeting a few days back with a foreign person, and he was saying that your Indian regulators are no-nonsense regulators, very strict. I felt happy because at least we got some credit from the Western sector. As financial inclusion continues to expand, increasing participation from smaller cities in India's mutual fund industry will witness a significant development. There is also a need to develop simple, transparent, and affordable products which will help investors effectively manage risk and optimize their returns. In fact, there is an app which you should download on your mobile, and if you press it, all your mutual fund investments will be there, and what amount of profits you are making, from which side of your profit and loss is going, you can see that this was not that 10 years back. So definitely mutual fund industry has come a long way. With these friends, I thank the distinguished guests of the dais, as well as thank all the audience. So ladies and gentlemen, this is all I have to say. Thank you. A very great thank you to everybody in this hall. Thank you very much.
Thank you, Arjun, sir, for the common vote of thanks. Now is the time to felicitate the additional speakers on the dais. For this, I would like to invite Mr. Shankar Majumdar, head of BFSI, to join the scene.
Thank you, Sangeeta. I once again like to thank all the senior dignitaries, speakers, sponsors, and delegates who are present here for the 16th edition of ICC Mutual Fund Summit. 16th edition back to back. I think it deserves a big round of applause. So I'd like to start with the felicitation. My first request to Mr. Abdul Singh to come forward and kindly felicitate our chief guest, Sri Anant Narayan Gopalakrishnan. I'd like to mention about the certificate which has been presented to the chief guest. We have tied up with Rotary Foundation in Bombay, and the certificate actually says that we have planted 6 number of trees in the Sundarban Tiger project. And there is a QR code, sir. You can scan and check that what is the progress of these trees. So this is the initiative ICC has taken nowadays. Thank you, sir. I will now request Mr. Arun Gupta to kindly come forward and felicitate Mr. Venkat Nageshwar Chalasana. sir. I request Mr. Abdul Sen once more to felicitate Mr. Shashi Krishnan of NISM and former CEO of NKS Trust. Request Mr. Abdul Sen to kindly stay back and felicitate Mr. Joydeep K. from PwC here. Our criminal line for our insurance sector is Mr. Thank you, Mr. Sen. I will again request Mr. Ladda to kindly felicitate Mr. Abhishek Kavla, MD of Samara Capital. Mr. Ladda to kindly stay back and felicitate Mr. K.S. Rao of Aditya Birla. Mr. Ladda to now felicitate Mr. Sudhir, please. Sudhir sir. And now Mr. Ladda to stay back on the stage and Mr. Sen to kindly felicitate Mr. Ladda.
May I now request Mr. Shantan Majumdar, Head of BFSI, to felicitate our Chairman, sir. Mr. Abdul Sen, with the Dr. Appreciation Certificate and the Memorial.
Request all participants to kindly stay back and have a group photograph, please.
प्रोफाइल है जरूर और प्रोग्राम का देखो ना 3 लोग 3 लोग ऐसा सभी है प्रोग्राम होता है तो प्रोग्राम
Thank you, a special guest and digital dignitaries on the dais. We just come to an end for the inaugural session of the 16th Mutual Fund Summit. There will be no break in between, so kindly be seated. We will start our next session shortly. We will take a few moments for the session change, so kindly bear with us. There is a very innovative session coming up in a few minutes. One announcement, there is a selfie zone created by PGP Academy in the reception desk, registration desk. So you can take selfies there. It's just for your information. Thank you.
Read off. Out of Sorry.